Welcome everyone to Rekt Radio, episode 96. We're closing
100
in on 100 episodes.
Amazing.
Yeah, I don't think we've provided anyone with any insightful color really in that entire time. What's one good thing you think you've learned from the show in the last 96 episodes?
I've learned a lot from this show, actually. I think it's kind of like a group therapy for me with like traders each week. Like genuinely, everyone just gets on here and realizes that despite everyone talking about all the wins and stuff like that on X, everyone goes through massive swings, losses, all that sort of stuff, and it's good to talk about it. Everyone except Wintermute. So we've got them on the show this week.
Big show this week. Welcome, Jake from Wintermute to the show. It's we've usually had, I think, like retail style crypto traders, so there's quite a nice change to this show and kind of look at things from the other angle. But welcome.
Thanks for having me, and good to be here.
So let's I think it would be a good thing to kick off with like just maybe an explanation of what Wintermute really is. I think anyone who has been trading in like meme coins and just generally in crypto, you see Wintermute banded around a lot of fan theories out there and all that kind of stuff. It'd be good to hear from the horse's mouth. What is Wintermute? What do you guys do? And what's your role?
I mean, to give you sort of some context as to where I'm coming from, and before I joined Wintermute, very briefly, I mean, I spent 7-8 years in ultimately a global macro seat on the buy side. What I was doing there is obviously trading every asset under the sun. Anything from sort of short-term interest rates to FX to commodities. Then further down the line, found crypto. Obviously saw there was a huge growing market, really wanted to get stuck in. So I guess fate would have it, a seat came up at Wintermute, and so I joined the team here. My role within Wintermute, I'm sort of running on the OTC desk. So any sort of third-party counterparty flow is coming through, whether that's through London or our Singapore desk, and that's everything from sort of spot options, wider derivatives. In terms of really what sort of Wintermute is, I mean, if we sort of contextualize it maybe for, I guess, the people sort of listening in that maybe still are a little bit in the dark and do subscribe to, as you described it, the fan theories. If you roll it sort of right the way back, and like the sole function of a market really is to facilitate trade, right? And it does so through this constant auction process. And I mean, if there's a trade is actually going to occur, it has to occur somewhere near the mid price. I think everyone in an ideal world wouldn't sort of dispute that. In order for that to happen, there has to be liquidity on the bid and the offer, right? Otherwise, that price would actually not be the fair value. And without that, the sort of market would be completely unfunctional. So if you sort of think about it like that, I mean, any single market in the world needs liquidity in order to function and be operational. And that is ultimately the problem that Wintermute is solving for. In essence, I mean, how would we describe ourselves? We're an algorithmic liquidity provider. We've got operations on obviously the main exchanges, whether that's centralized or decentralized, and then alongside the over-the-counter offering where we're offering sort of spot derivative block execution. One sort of quite important distinction maybe, and I think this comes from a misunderstanding maybe about when people refer to us and sort of other LPs as proprietary trading firms. What that means is we're using our own proprietary capital to provide liquidity. We are not taking directional positions. So I guess ultimately how we're making money is by being market neutral and balancing inventory across different venues, of which we trade on sort of 60 plus, really profiting from very, very small price discrepancies, but trading sort of 1 million times a day. So that's ultimately, hopefully, a bit of an overview of where we're coming from. We're not sort of in the business of, we're not a hedge fund, basically, which seems to be the overriding belief on sort of crypto Twitter right now.
So just to break that down, you don't take directional risk.
Correct. Yeah. No, we're completely market neutral. Yeah.
Is that not like you trade all day and you take no directional risk in crypto. Like that seems like.
So
how have you been in crypto taking any directional risk?
I mean, directional risk is, how you define directional risk. We're not sat there accumulating tokens thinking they're going to go up. We're equally not shorting them thinking they're going to go down. Over the course of business, as a liquidity provider, we get given positions by the market. We then hedge out as quickly as we can to get back to market neutral. If that is sort of on a big OTC block, obviously that's priced into the spread, but we are not in the business of sort of taking, I guess, how traditionally people would see a proprietary trading firm in that, taking positions basically.
And in terms of that hedging bit, does that mean you only really trade coins with perps, or how would you hedge a coin which doesn't have perps?
Well, no, I guess we trade pretty much everything. I mean, last year alone, we traded about 950 assets. Not all of those have perps. Hedging, yes, obviously hedging in its traditional form would mean, okay, you can sell a perp and get your deltas back to flat. The other way to think about it is if you take on a long spot delta, you can equally hedge that out by selling that back to the market slowly, and that you still have exactly the same result in that you're hedged. Ultimately, you're not holding directional risk, right?
Okay, so I see what you mean. You wouldn't ever like hedge on like a Bitcoin beta or something like that, or like you if you get hit on a block of like in a liquid coin by being dealt into, you're just selling it.
Yeah, exactly. I mean, like there's obviously like the odd situation where we might lean on a major, but I mean, in very, very specific circumstances, everyone sort of knows like correlations exist until they don't, right? So relying on that to hedge any delta is, especially when these sort of long tail assets, right? Like it's not all that effective. So we would choose sort of generally not to and hedge the underlying pretty directly.
That makes.
And what happens if? Yeah, I just wanted to touch on that because it kind of. Mando and I used to trade like high yield and distressed credit before we were in crypto, and it was like really idiosyncratic stuff. So you just get hit on like a random, I don't know, like some random
Greek bond
or
and
like
you're
CDS something, and then you just you're like, okay, there's like literally no way I can hedge. There's no market risk to it. Like it's just all, it's just all like idiosyncratic risk. And I don't know, like it seems like correlations within crypto are actually relatively kind of intact. Like there are very few coins I think that don't generally move with the market, but every so often something like that does happen. So like maybe like let's say you get to the end of the day and you haven't moved enough, I don't know, you haven't moved enough Trump coins, or you haven't or you've been taken short, too much of something else, and it's the end of the day. Like how do you guys think about mitigating that risk like overnight if you haven't been able to trade something in and out?
Yeah, basically? I guess like the main point there is that we don't really have, we're a 24/7 trading desk. So when we finish in London, we pass over to Singapore. Obviously, there's a handover. Everyone knows what the deltas are. Everyone knows what positions need to be hedged. And so really, it's just a fluid handover. There's not really much more to that. Obviously, it's not like equities or anything. Like in my old days, you used to switch your PC off at 4 or 5 p.m. People used to go to the pub, but it's not like that now, right? It's when you've got things moving 24/7, it's a very, very different market. But equally, obviously, if we know that liquidity is going to dry up in the overnight session, then maybe that's a consideration. But we're talking about sort of pretty edge cases here, I think, in general, given the amount of flow that we are doing.
Yeah, that makes sense. And the other question I had was, I think you guys sort of like became famous in like the meme coin world a lot, just because of the activity in that, and obviously that's a big sector that took off last year. Like, how early were you guys in terms of providing liquidity on this stuff, or was it a case of, okay, we need to see volumes go up a lot and then we'll start to enter that space? And then also, like, are you able to share any stats or rough ideas on like what proportion of maybe like your business is in meme coins, whether that's by volume or by number of trades or by even just by mindshare? just curious to hear like your
yeah. I
takes
mean,
and
I think
thoughts on
like
that.
if you go back to how we really view opportunities in the market, that might be a sort of decent framing to the question. Like, and again, sort of leaning on hopefully the explanation that everyone sees now where we're coming from as an LP. For us to be needed in a market, there has to be organic volume, and that basically means that we need to ideally identify the opportunities before they exist, set these new names up, get in the books, and I guess just be there to be hit on the bid or offer as and when needed. That's where the real opportunity is. So for us, definitely with the meme coins, I think, yeah, you're right. Everyone obviously knows we were fairly early doors in that. And I think that came from an understanding of sort of, okay, this is where the puck is skating to almost. So, and that was a sort of fairly reasonably large push, especially from obviously the BD team that then feeds into trading. In terms of the sort of stats, I mean, we're still, I mean, if you look at the OTC volumes, for example, last year, I think as a whole, memes made up about 16% of our OTC flow. That was up from about 6.5%, 7% the year before. So it's jumped a lot, but it's still obviously on a volume basis. It's not enormous. But because we're obviously active across the market in, again, like sort of 900 plus tokens last year, there's obviously very easy for everyone to see overtly that we're only trading these sort of memes when the reality of it is very, very different, if that makes sense. But yeah, like we like to be where the volatility is, and that's where the opportunities tend to be, and where the price is. Obviously, there is dislocations, and there's positions there that we need to rebalance inventory around it, basically.
Yeah, I was asked, like, you are now like the number one
sure.
holder of several different coins, like, and not small. How do you manage that sort of thing? Like, is there any risks to these like delta neutral positions? I assume like there's obviously, like you said, hedging going on, but when you own like 5 to 10% of a coin, like how is that managed?
I mean, in order to sort of obviously do the LP activities, like generally, yes, we need inventory. There's a couple of ways we can acquire that. One, in the open market, if something's a big name, we can buy it. It can be hedged relatively easily. In the case of like a large cap token, when you're sort of talking about these ones that it sounds like sort of you're alluding to now, I mean, there's a lot of other ways to acquire them. I think the sort of LP model is reasonably well known, but a lot of them will be sort of borrowed, and therefore directional exposure does not exist for us. So that's a very, very important distinction on the sort of model side. So when people are sharing our balance sheet online on Nansen and saying Wintermute are accumulating, we're not doing it for any other reason than to use those sort of tokens to provide liquidity. And that's ultimately the business we're in. And yeah, I mean, if there's a hedge, if there's a perp, it's an easy decision to hedge. If it's more esoteric token, then there's other ways to do it that mean we don't have deltas, basically.
So and maybe this is too explicit, but there would no other strategy around that. Like, you wouldn't, because people read into this, right? You must see this.
Yeah.
They must be like, right, they've got like 5% of this. There's nothing around like this could lead to a listing. There's nothing to do with like this would be preliminary for like, okay, yeah, like this is useful because I know some exchange might ask for like 2% from the market maker. There's nothing around that.
What was the question? Sorry, as in
it's really just about being an LP. There's no other strategy about why you would have like 5% of a token. It wouldn't be like, okay, they would need this amount for a potential listing.
No, exactly. Yeah.
The other question I had was how, like, on top of crypto Twitter are you guys? Like, I think, you know, when people work in institutions, you kind of sort of think, oh, they're like monitoring the news and that kind of stuff. And, you know, there's obviously like stuff like politics and macro that will affect crypto prices. But then, like, you know, in this meme coin world, there's just random shit all the time that will come up, which will mean something will go up or down. Like, do you guys have like a research team that's like actively monitoring that stuff through Twitter, or is it just like the sales traders? Like, how do you guys kind of like stay on top of all that stuff?
A large part of sort of the flow that comes up to the trading desk is driven by the BD team. We've got desks in London, Singapore. We have headcount working remotely as well, and these guys are definitely sort of way more in the trenches than a lot of the trading team are, because they're trying to find this next new meta in order to get ahead of it. And we've sort of done that pretty well. Obviously, with the meme coins, we were early in a lot of the sort of AI agents because we have that big pass through and flow through. In terms of on the trading side, again, like, because we're a lot of intraday moves are ultimately noise and variance, so we're not super plugged into the news. I mean, I write a morning note for the benefit of sort of OTC counterparties, but a lot of that is done sort of at the end of the trading session when it's already happened. It's not like we're sat there being able to sort of trade around the news, for example. We're in the books all the time. We have sort of uptime requirements. So even if there was a big event coming out, you're going to get hit on some stuff the right way. You'll get hit on stuff on the wrong ways, but ultimately it all, over a large sample size, it evens itself out, right?
Yeah, you've created a competitor to the daily newsletter I do.
Oh no!
Have you not seen this, guys? They do like a winter daily news. You're the one who writes it, are you, Jake?
Yeah.
I might need to use my safe word here.
Sweet. I know I stepped in late. Sorry for showing up late, guys. KBM, nice to meet you. Yeah, so you said that a little nugget there. You said you guys try to get ahead of some memes and like whatnot, but I know you're not prop trading, obviously, or anything like that. So like, what's the strategy there to try to get early? What are you guys doing?
Yeah, I mean, a lot of it, right, comes down to sort of how we acquire inventory. In order for us to acquire inventory, we need to be on it and chatting to the projects early doors. That's sort of how the whole business model relies on that. So being on it early for us means that we're having active conversations. We're trying to sort of put them in front of the right people. We've obviously got a big network of other projects that we work with. So there's a lot of stuff that we can do that ultimately helps both improve liquidity in the book, but also sort of add a bit of value outside of that. So that is sort of directly what we're referring to there, and it's normally driven by the sales and BD team.
Yeah, and is that like, what's the filter for that? Just following the volume kind of thing, or?
Yeah, I mean, different people. I mean, like, you can sort of think about it as like how every trader, for example, if you're obviously in a risk-taking seat, has their own little methodology they use to identify what's hot, right? And I guess everyone here on the sort of BD side of things is exactly the same. Like, they have their little niches. They're in the trenches. They're going to conferences. They're chatting to people all the time. And yeah, like they'll bring stuff over and say, look, does this look interesting? And we'll take a look at it. And a lot of the time it's all great stuff. But yeah, that's sort of how we're staying on the pulse, really.
Do you guys have a VC arm at all? Like, I know like other market makers like DWF have announced a sort of like fund model where they're going to do investments at the same time. You haven't ventured into any of that sort of stuff?
We do, but it's completely, there's a Chinese wall. There's a complete Chinese wall. I know a lot of LPs, when they're working with projects, for example, will like promise investments if they come and they give them the deal. We don't do any of that. It's run completely separately. The team is based in another office / remotely. But there's obviously some synergies there between, okay, if we see something that's really interesting, and often it comes to the case that they're already talking to them because they're equally well plugged in, and they're super active. They've got a big portfolio.
I love all the market makers just throw shade at other market makers, but they do it like subversively.
No, I mean, look, I think everyone's doing a good job.
But it's so obvious. You guys hate each other. Anyway.
What are your thoughts, Jake, on the AI agent stuff? Like, obviously, towards the end of last year, that took up a lot of mindshare and activity. And we sort of had like, I don't know, it's had a good start this year, and then obviously Trump came along and it kind of changed things a bit. Like, is that like a sector that you guys saw a lot of activity in, something that you think it will pick up in terms of volumes? Like, how do you?
Yeah, I do think it sort of reminds me similarly of when sort of OpenAI first had that huge investment, and that whole sector that really kicked off that whole initial AI move, which then obviously faded, not just there, and then obviously Nvidia took that narrative on its own. But I do think like this is something that could potentially have a lot of legs. There's very rarely that sort of a narrative comes up and you think, actually, this is really, really, really unique and pretty interesting to dig into. Where it ends up and what it ends up looking like, I don't know. Probably different than it is now, but I do think it's definitely a sector to watch going through the rest of the year. Like, it's going to be in the headlines all the time. Like, even yesterday we had that, like, Trump announcing an investment into OpenAI and some other sort of AI companies. So it's always going to be in the news. I do think this whole space is, a lot of it's around mindshare. So as long as it's coming up as a Bloomberg red headline every now and again, no one's going to forget about it.
Can you, like, just going back to the original bit where you were talking about the origins of Wintermute? So Wintermute doesn't just do crypto, right? It does other things.
No, we're crypto. We're crypto native, 100%.
You're only crypto.
Yeah. Exactly, yeah. So we only touch business that has crypto underlying. And
is that the case for the other major market makers, or I know, like, what we used to, LPs, like, is that the same? That are you starting to see other bigger TradFi style LPs come into crypto?
Yeah, I mean, there's definitely that element of, I think the basis trade was a big wake-up call for a lot of people who were sort of doing maybe the ETF redemptions, things like that, where there was an edge for them to also have a touch on the underlying. So I think you're having some of those lean in. It is obviously something that's probably going to continue, I would see, but I think that the time it takes for that to filter down into maybe even outside of the top 5 names and the tokens is going to take a while. Like, we're obviously in the middle of this big regulatory change. Yes, people are getting in, like, they've been dipping their toe in for a while, but this ultimately opens the floodgates. It's going to take them a while to get through the first majors, your Bitcoin, ETH, your Solanas, now obviously your Ripples. But when it starts feeding into that, like, midsection of the market, it's almost like a mid cap, where that is ultimately where we're, I'd say, most active. So I think, yeah, if we think about how long it's going to take, we don't feel in danger at all yet.
Yeah, I mean, this is kind of a random question that people keep asking. I don't know if you want to touch on it or not. People are constantly bitching lately when Wintermute enters a coin. They think you're painting the chart in a weird way. Obviously, this isn't happening. What's the defense there? Like, how wrong are people with your strategy and stuff like that? Like, when they make these claims?
I mean, I think, like, a lot of the claims are obviously stood
They're wild,
real sort of bias behind it. I don't know. I mean, I think a lot of it is, like, at the end of the day, what's happened when we're mostly getting involved is there's ultimately a liquidity event. Maybe they're going to list on a big exchange. That in itself is obviously going to be there. You already have people that are holding the bag. What I would say is, if we weren't in the books and people are selling into an empty book, it would be far, far, far worse. So I think that it cuts two ways. Like, and I do genuinely think that it's just from a huge misunderstanding of maybe what we are doing and how we actually trade. Like, I think the general consensus is we're loading up positions and dumping them on the market, but I mean, we're not doing that. So it's hard for me to have any other retort other than that I think it's just a big misunderstanding there.
Could you actually also give us a little bit of I mean, you must deal with this all the time, but, like, a little bit of understanding about how, like, the listing process has evolved maybe in crypto. I know now, like, Binance got some criticism recently, and, like, now has this whole alpha thing. Like, it's very, very difficult for retail people to, like, work out how something like that even happens. Do you still get asked for big listing fees from these exchanges? Like, how is it now become very procedural, or is it? I know the early days it was not like that.
I mean, in terms of sort of, we obviously have no sway whatsoever about what gets listed, what doesn't. What we can do down the sort of BD stream is make introductions to listing teams. That doesn't guarantee a conversation. It doesn't guarantee a listing. It doesn't guarantee anything, sorry. But there are those bells and whistles in place. There is strong procedures around that now, because definitely at the end of like last cycle, when things were getting pretty extreme, and that was when it was really, really bad. And I remember people, obviously, there was people on Twitter who were getting front run and things like that. And obviously information was leaking out, and it's definitely a process behind that now. And I'm not sure about the status of exchange payments. I also don't think that's as commonplace anymore, which again was obviously rife last cycle. But this is all managed. This is not something that we sort of manage ourselves. We make introductions, and it's down to the projects themselves to sort of get the listings.
Yeah, I mean, compared to stocks, like if someone gets included in like the S&P or the NASDAQ, it's so like, okay, well, there's this formula. And whereas I think with crypto, it's just such a black box. And because it's so, it's all these like low caps, it's so difficult to work out how that's going to work.
Yeah, no, I think that's fair enough. And all of this stuff is changing, right? Like we're in a fast moving market. It's becoming more institutionalized. There's a lot of benchmarking going on. There's ETFs. There's like multi-coin benchmarks, things like this, that all are going to demand these processes to become more widely adopted. So, which is only, I think, is brilliant for the industry, really.
How much of what you guys do is on centralized exchanges versus dexes? Like, I mean, I presume it's mostly on sexes, but like, do you guys get involved in the DeFi side of things as well? Like, is that an option for you guys to help with your liquidity needs, or is it just mostly?
Yeah, we have a decent sized DeFi team, a big DeFi operation, which obviously I'd say is probably the same size and scale as the centralized exchanges in terms of like the tech stack and sort of the headcount. There's a slightly bigger swing volume wise towards centralized exchanges, but there's a lot of sort of obviously opportunities there when something's listed on both venues, where actually that liquidity is, you'd obviously get paid more for that liquidity on those venues. So we're definitely there. And again, it comes down to like, if something's trading really, really heavily on a DEX, but not on a centralized exchange, we'll look at it. Is it an opportunity? If yes, we'll take it a bit more seriously. But yeah, I mean, there's nothing really that we wouldn't get involved in. Like there's some chains that are a bit difficult to, but I guess the main ones we're live on them all, and we're sort of providing liquidity on most of the large, well-known DEX venues. Yeah.
And you sometimes get involved in coins that you're not like the sign market maker of, right? Is that true?
Yeah.
Like you guys?
Yeah, absolutely. I mean, like again, it comes back to the opportunity bit, right? If we can avoid taking any directional risk on a token because of the existence of a hedging mechanism, and there's a load of volume there, I mean, it's an opportunity that we're going to get involved in. So yeah, I mean, it's mostly when you're talking about the sort of deals and LP deals in place, so for the smaller cap tokens where you obviously cannot get hold of the inventory. But yeah, if it's a large cap, then and there's lots of volume and volatility there, then we're probably going to be in the books.
So for that, like, let's say there's a coin, for any coin that doesn't have perps, your inventory in a coin that you haven't been signed for would really be you taking liquidity because somebody's come to sell it to you. But if they do have perps, that might be more like an active decision where it's like, okay, well, we can see like a delta neutral. Okay, so like if you are,
I mean, we can also spread it up into sort of the OTC business, whereby obviously people can come in at any time with any token, which obviously keeps things really interesting because you never sort of know what you're going to be trading at the start of a day. They can be stuff that we are not currently set up on. We can set tokens up pretty quickly. As long as there's a decent venue and there's decent liquidity there, we will obviously look to take the trade. We very rarely turn things down. But yeah, that's sort of how we're driven by the opportunity wherever we see it. And if that means setting something up, then we'll trade it. Yeah.
Okay, that makes a lot of sense. Yeah, because I think it just sometimes it's strange, like how sometimes Wintermute is in, and again, people might think. I mean, I would read something like this, and I'll be in a chat, and they'd be like, "Oh, Wintermute is buying a low cap," and they don't realize that's maybe like an OTC trade that's actually been sold to them rather than you actively going in.
And it all goes into, we're managing it all in sort of one book as well. So it's obviously very hard to, this is why when things get passed around, we see it all the time. We're obviously plugged into it because I think sometimes we sort of quite enjoy watching it. But yeah, you can definitely see when there's a big OTC trade, and we know what it is. Obviously the market doesn't, and it's trying to work it out. But yeah, then you see different spins on that take, just gaining momentum and get reshared by all sorts of news media. But yeah, a lot of the time there's only maybe half or even a third of the story, really. Yeah,
because in some ways that would be the opposite. Like if somebody's tried to get out OTC, that would normally, if it hasn't been listed for perps, I think it's kind of the opposite of what people read into it. I think it's kind of interesting. And then in terms of, obviously there's just like fabled huge wallets that you guys have, which just have, like you said, like hundreds of millions of different coins and stuff like that. Do you only get in and out of that wallet, or like I know there's like tons of different transfers, but like generally do you have like hundreds of wallets, or is it just how are you trading? And is that just like a vault wallet, or?
I mean, I think the ones that are mostly shared around are custodial wallets. Right. Obviously, a large part of the reason we try and minimize what's left on exchange, right, for obvious reasons, because we've got a lot of sort of risk caps in place to prevent us being overexposed in one area. So I think a lot of I don't know for sure, but I'm pretty sure all the ones that I've seen are sort of vaults that we have with our custody partners, which obviously are public and they've been tagged.
That's a good point. What happened during FTX? Because if, like, let's say you have a short perps on versus long spot, that's a really dangerous position, no? Like if then the exchange goes down.
Well, yeah, exactly right. That's there's no such thing as a free lunch at the end of the day, but it's how you manage that risk around it, and not being sort of super localized around one exchange or even one chain, right? Like everything is, or one chain, one token, one exchange. Like there's a lot of different sort of factors to think about when you're dealing with blockchains and unregulated venues that you don't have to think about in the traditional world, basically. But yeah, and it's constantly evolving as well.
Yeah, that would be like the number one risk, I feel like. If I was running a basis trade, and then the exchange went down, I feel like, yeah, that's
I mean, it's counterparty risk, right? And I think we do a pretty good job at mitigating that wherever we can, whether that's just, I mean, at exchange level, at counterparty level, like when anyone comes in and does a big OTC trade, there's obviously things in there that prevent us being overextended or overexposed, whether that's pre-funding large blocks, whether that's obviously credit due diligence if we'd extended a credit line, but all of these things like require a solid counterparty on the other side of the trade. And then even if it's if we're operating like on a bilateral basis, we're trading under like the ISDA framework. So we've tried to bring everything we can from a risk perspective into crypto that used to exist. I used to trade with all these things in trad, and as did all the other guys here. So yeah, it's been a sort of, we've made it very, very similar as much as we can to the sort of traditional environment.
So when people define, people talk about tier 1, tier 2, tier 3 exchanges, and I think at least within the retail people, that sort of defines like reputation, I think. And then when you speak to people at like an institutional level, it seems to define counterparty risk. Like, how do you guys view that definition of that tier 1, tier 2, tier 3? Is it more from like, I guess you feel more comfortable providing more liquidity on exchanges where you perceive the counterparty risk to be lower than others, and that's probably a spectrum across.
Yeah, like, I mean that's I probably couldn't have summed it up any better, really. Like it comes down to us to counterparty risk. Again, like some would extend us credit lines, so we're not hugely exposed. We obviously have daily settlement windows, things like that, for when we need to move things around to actually like balance exposures. The risk team here is pretty hot on that, as you can imagine. But yeah, I mean, our definition of sort of tier 1, tier 2, tier 3 is probably slightly different. I wouldn't say hugely different, but it's going to be slightly different to sort of most of the market and how they'd feel about it.
Yeah. And how much of a difference does that make in terms of like the job that you guys can do? Like, let's say you're providing liquidity, you're one of the main liquidity providers on a token, and let's say they're only able to get it onto like a tier 3 or tier 2 exchange where you guys perhaps like do provide liquidity, and then let's say they're able to then get it onto like a tier 1 exchange, which you guys are really happy about. Like, how does that change your guys' actions in terms of liquidity provision? Is it just that you end up providing like more depth and like tightness of spreads, or is it, is there like
I
more
guess
to it than that?
again, like the things to consider are the volume, the organic volume that's created by the market. If that increases significantly, then we would need to increase the size that we have in the books accordingly, because there's more of a need for it. So I mean, that's probably like the realistic, I guess you could call it, life cycle of one of these listings, right? That you go on a lower tier exchange, we're in the books, volume picks up, we have to increase the size, it goes on a bigger exchange and we have to do that again. So I think that's pretty much how sort of the natural process would look like.
You say you price at any block. Maybe we're going to some, like this weekend with Trump. I assume you guys were all trading this weekend. I actually don't know, but
yeah, we were.
What was the biggest block you saw on Trump this weekend?
Ballpark. Indicatively, maybe low 8s.
Okay.
Yeah.
Wow.
Yeah. I mean,
went for like 9 figures or something like that.
I mean, talking about things that actually traded, like every single day we'll get like big indicatives coming in for, I don't know, $100, $200 of something, but they very, very rarely trade for obvious reasons. So that would be a fairly large position for, I guess, an OTC desk to be very. It's obviously the sizes are smaller, but on a risk-adjusted basis, they have to be.
It is kind of anecdotal, but I've heard a lot of like friends recently giving you guys their orders and using you guys to execute trades. Curious, like for retail participants that are like watching this show, like you can actually use Wintermute OTC to execute trades in probably a more efficient manner. What is like the minimum sizing that you guys do for this kind of stuff?
Normally we'd say minimum clip size is around $100K US worth. For it to be really worthwhile for someone, it needs to be frequent or big block flow. If you're looking at maybe doing 100K of Bitcoin and ETH, it's honestly, I'd be the first to tell you, it's probably not worth onboarding. But if you're looking at doing reasonably larger flow, maybe a few times a month even, we're almost always going to be able to beat the pricing you can get on an exchange or on a DEX if it's listed on exchange. Yeah.
So it definitely seems useful. You can get in on the party and use Wintermute yourself rather than just bitching about things that they're not even doing.
Come and see how the sausage is made.
Yeah, exactly.
What about some other examples? And we can be broad again here. Like, surely founders of projects are also trying to get out of coins. Do you sometimes have to price up blocks of like 10% of the coin from like a founder? Like, do you sometimes, and would you even do that? Like, or do you avoid it when they're like the team is involved in selling tokens?
A lot of stuff that we see comes through brokers. So where you can obviously, I mean, our sort of ultimately before we were taking counterparties directly, we built the business by basically being a wholesale liquidity provider, and that meant that brokers plug into us. So a large proportion of the flow, especially on these big blocks, comes unnamed basically, and it will be via a broker. So that we'll often be pricing it up without that color. So yeah, there's probably not loads I can give you there. I know you're sort of after the juicy stuff, but yeah, because it's coming through a broker there, then it's pretty difficult to say exactly where. You can sort of work some of it out, but without any sort of air of confidence in the prediction, really.
Yeah, I guess I would definitely, if I was in an LP scenario, I would definitely be pricing that one well back.
No, I mean we'll price it. I mean, like I would definitely say our niche on the OTC side are these longer tail alts, big blocks of them. But yeah, I mean, if you define what a big block is, like you can fairly comfortably shift maybe 5 to 10% of a token with relatively good volume over the space of sort of 24 to 48 hours. It's obviously, it sounds a lot, but if you think about that will be reflected in the pricing offered, there's actually, on a risk adjusted basis, again, it's not a huge sort of risk there. And it is done fairly often.
And is there a calculation involved in that? Like, is it just gut feel? Like me and Obi are from a market where it's more like, it's a bit more gut feel. Obviously there's some, but like you working, is there like a formula you guys have? That's like volume, depth, that sort of stuff? Like, or is it more like, hey, where should we price this block? Price it here and then send it back.
Yeah, I mean, normally it will be a mixture of both, right? If like most of the tokens that come through, I would know how it's going to trade out because I've traded it out before. We've seen how it hedges. We sort of have a rough idea of how much the market can take. We have a big sort of team of quants, and all the traders here are pretty much part developers as well. So we have like some really good models that we can feed into, which helps a lot when it comes to pricing these things. On a big block, then there will be more of a discussion between people because there'll be different ideas. But for the most part, you sort of have a good understanding when something comes in where you're going to price it, and then you just have to sort of check depths, check volumes, check volatility. Is there a catalyst coming up? I mean, all the same stuff, right? Like you wouldn't have taken a Greek bond just before the into the crisis, right? Like knowingly, or at least you'd have been wider then. But it's very similar. I mean, we're sort of ultimately what we've done is we've just brought that model into crypto.
Wanted to ask you on just like general market thoughts here as well. Like we've obviously had like massive rally in the last 24 months basically now, and we've kind of like well into the Trump trade. He's been elected, said a few bits and pieces. Where do you think we are? Like, do you believe in like the whole 4-year cycle theory? And if so, where do you think we are in that cycle? And then just generally, what's your guys' view over kind of like the next year as we're in January?
I think I guess on the 4-year cycle, I'm not really a believer in the slightest, to be honest. I don't think there's a big enough sample size to draw any reasonable conclusions. That's just my thought. I do think what we're trading ultimately is a macro asset, and we're going to follow risk markets probably most of the time. Where we're at the moment, the setup, to be honest, I felt when we were coming into the inauguration on Monday was very, very similar to when Trump took the stage at sort of Bitcoin 2024. There was a huge jump in vols, like everyone had bought protection, everyone was speculating on it. And then I guess there was only really one way it could go, and that was just a bit of disappointment. And we've seen that initially. That said, I think it does look relatively well supported here. We see how it trades in the next few sessions, but I think for the rest of this year, for sure. I mean, we've seen it already, like in yesterday's session, like people are trading this really, really actively. Like you can see it in the tape, you can see it when headlines hit it. So people are active at the moment, and that does feel like a different market than it did, for example, like last June, July, when obviously everyone was wanting to jump off the nearest building because there was literally no volume, no volatility. Whereas now it does feel like it's changed. And I think one of the big themes this year will probably be, in my opinion, like the big outperformance of what I've sort of referred to it as a bit of a distribution premium, i.e. if we now are going to see that next wave of adoption, which actually I think, hate it or love it, like this Trump token has brought a huge amount of eyes, and it will bring a lot of eyes. And the next sort of step there is, okay, what do people come in and what do they trade? And I would argue that there'll be a bit of a distribution premium. And by that, I mean, how can people on-ramp quickly? How can they buy the lowest unit bias token? And that is where people are probably going to look at for 2025. So I can see that being a major theme as we go throughout the year. But yeah, I mean, as always, like if you're long, it never hurts to have any protection. If you're bullish, then at least you can still hold a spot bag, right, and monetize some of the puts or some of the downside protection if it does dip.
And what sorts of like macro stuff are you looking at to give you an indication of like potential alarm
I think the
bells
main
and
thing at the
stuff?
moment is obviously 10-year. I think that's a very good proxy for what people are looking at the moment. Obviously, those inflation readings, like it's a very different market even than it was 2 weeks ago or even 10 days ago, when actually the main driver was macro. It was heavily focused on those CPI, PPI prints after those hot like bits of jobs, and like the PCE came in higher, and services, PMIs, prices paid. So there's that inflation move down, and now I think we're sort of in an area where, okay, crypto flows can take back over. At some point, I think macro will matter again, but I don't think we're there yet. But I think the one thing that I am keeping on my radar is 10 years, just because that's where you get the headline dumps, where 10-year takes whatever, 5, 6, and then that's probably when you want to be a little bit nervous.
Yeah. Do you have any view on heading into the FOMC next week? Like, kind of feels like it was a pretty relatively hawkish FOMC to end the year, and then we kind of rallied because we had a couple of like low inflation prints, but payrolls are still pretty high, and it doesn't. I don't know. For me, there's not enough meat on the bone for him to like change his tune at all. Like I don't think the Fed doesn't. To me, the Fed doesn't seem very reactive. On like a monthly basis, it like takes some time to see data, and then they maybe like change what they're saying. So like I personally kind of view that as a market risk, because I don't think, you sometimes you see stuff on Twitter and it's like, oh wow, like now we're gonna have more rate cuts and all this kind of stuff. But I just think like 1 month of inflation data or 2 months is not gonna make him change what he said. So I kind of view that as like a potential risk event for the market and for crypto, but just was curious if you had any.
Yeah, I mean, again, I think at the moment, like it's super flow driven, just because there's been obviously with entering blackout, and the last thing that really we have to lean on are comments from like some of the members straight after that CPI print. And if you follow the sort of adage, like listen to the game master, that's obviously all we have to go on. I mean, it's you can't really call these meetings on a coin flip, but I also would argue that December's really wasn't as hawkish as the initial market reaction suggested. I think obviously the inflation reading got a lot of the headlines, but if that was it, and we've had a decent dip, and members are now saying, okay, like we quite like that as a print, I don't know. It does it revert expectations? I don't know. It just depends how we trade into it now.
Yeah, it's very different to. I think people have so much PTSD from 2022 and 20 like end of 21 to 22, but it's so different to that because like Jan 22 inflation was already at like 6 or 7%, whatever it was, and I think the Fed base rate was like 0.5% to 0.75%, whereas now you have like 2.8% inflation, and the base rate's like 4.5 to 4.75. So it's just like a completely
different setup. And I mean, like they were forced, like the Fed was almost forced to lift rates very, very quickly. And you're going from, as you said, like low base rates. And it's always great when you get people sort of looking at the percentage changes from that really low base. And you think there's not much thought's been done here. But you're right. Like, I mean, now it's so incremental. And it is like when you start looking meeting by meeting, like maybe there's intraday volatility, but ultimately at the end of the day, like I think the larger themes will play out in the end. And I think, definitely with crypto as an asset, I think with someone with a long enough timeline and enough belief, obviously that's probably the best place to be, and not looking at these small sort of little road bumps, but equally like never ever hurts to have protection on, right?
Yeah. Exactly.
Can I ask a slightly different question? Like, I feel as though, obviously, for a lot of retail, they look at crypto and they think, it's just like the CT influencers sort of stuff, and they probably miss the like, there's like bigger firms in crypto. Who do you guys actually follow in like the broader CT space? Do you think there are good traders, people that you would recommend people would follow? Like you market quite a lot, but I feel as though a lot of the market probably follow maybe the wrong people. I think that's largely agreed upon in crypto. Like often the biggest followers are like, it's not necessarily the best people to follow. But are there any people that you're like, okay, these guys are smart? Are you hooked into like owning Masari or like, maybe help out some of the retail about where to look?
Yeah, honestly, I feel like it's a difficult one, because especially on when a lot of people are anonymous, you don't really know anyone's like lineage almost. You just basically taking everything on face value. A lot of people turn out to be ultimately fake and posting fake P&L screenshots. What I would say is don't follow anyone who posts P&L screenshots. I think that's the biggest red flag. And if anyone's doing that, I would stay away. There's people I have met on crypto Twitter years ago. They're very, very good traders. They have about 15 followers there now. They just don't use it. But yeah, I mean, I have a list of sort of people I use for information, but it's more information sharing that you can find things quicker than hopefully the newswires pick it up, but mostly out of personal interest, to be honest. And I follow a lot of the macro guys, which I'll probably rather give shout outs there on. I think it's probably.
But is your view often that like, the biggest liquidity in crypto just isn't on crypto Twitter?
Yeah,
or
for sure.
Is larger.
Sure. Yeah, I mean, like a lot of the flow, like a lot of it, yeah, obviously a large part of it comes through brokers, but then equally, like we're facing off against hedge funds as well, and whether they're traditional hedge funds that are coming into the space and using it as a vehicle to express a view, or whether that's the crypto native hedge funds as well. They're the guys that are doing the size here. Anyone who is, I mean, don't get me wrong, like I don't want to sit here and sort of say no one's worth following on crypto Twitter, because that's fundamentally wrong as well. But I think being sucked into people following to copy trade is a very, very bad route to go about, basically. But yeah, I'd say most of the volume that I know of is definitely not living there. They're living in Bloomberg.
Yeah. So I just had, I know we're coming close to time, but I just had another quick question. How much, in terms of, I'm guessing there's a lot of institutional involvement in majors, probably in a lot of like altcoins and stuff. Have you guys seen, or do you have a view on how much institutional involvement there's been in the meme coin landscape, or has it been primarily retail? Just something that triggered a thought, based on what you just said. Like, most of the flow probably happens off of CT, but obviously everyone's just talking about meme coins. Is there like a big or any meaningful institutional involvement in that too, or is that really truly just like a CT?
No, I mean, there's definitely is, like especially the larger ones, because if you look at the likes of the top, I mean, you take Doge, you look at the book there, you look at Pepe, you look at the book, you can get size away, like you can do size there. And what institutions need in order to participate is they need enough size to get in, more importantly, enough size to get out, because they have to sit in front of a risk committee. So yeah, I mean, those names have been super popular. I mean, again, like this, we released our sort of OTC report from 2014 earlier this month, and I mean, meme coins traded by who we class as institutions in our flow, it rose about 210% year on year. So people are coming in, and that's not just obviously the size of the trades. This is like the frequency. It was weighted, so it wasn't just, it obviously filtered out the fact that the market is higher. We are seeing it a lot. Like I get pinged a lot from maybe people looking for like indicative quotes on a basket of these, whether we can benchmark them on like an index approach, which that's your standard. Like if you're an institution, you want to spread risk around and you want to index it, that exists. We offer that product as a CFD as well. So yeah, I mean, they're definitely trading it, but I'd say the names that they're trading are more driven by the liquidity requirement than anything else. And they're mostly just saying like, how can we get size away, diversify, and hopefully outperform Bitcoin ETH.
Yeah, that makes sense. All right, Jake. Well, yeah, I think we're just coming up on the hour now. So thanks a lot for coming on. We always ask our guests the same question at the end of each show, which is, what's your best advice to everyone listening on how not to get wrecked?
I think just like don't follow anyone that you see online or in the media. Don't follow them in blindly. Have your own plan, and sort of build your own conviction in an approach, or even just a holding that you have. That's ultimately what I'd suggest.
Yeah, I think that's good advice. It's definitely good advice. I think people can get carried away following the main characters sometimes without doing their own due diligence. Well, cool. Yeah, that wraps it all up. So yeah, appreciate you coming on. Thanks a lot for taking the time to chat to us, and hopefully, that clears up a lot of things on how the world of liquidity provision works. So yeah, thanks a lot for coming on,
Awesome.
Jake, and
thanks
cheers
all.
everyone for listening.
Bye bye.
Cheers, guys. Bye.